What I do is that I ask the buyer what they're trying to learn. Then I say to the buyer, I've been doing this for many years, and let me tell you what I think you need to know. What we do is that we identify the sustainability of the cash flow and sustainability of the revenue post-acquisition. We identify customer stickiness or unforeseen churn. We're identifying the levels of customer satisfaction and customer loyalty.
They could use it to negotiate a lower price because they could say, yes, I can fix this. However, that's going to cost me time and money, and I should be focusing on other things within the business.
You're listening to Before You Buy or Sell a Business, hosted by Jared Johnson, the top SBA lender in the country. On this show, we break down business acquisitions, talk to industry pros, and provide real-world advice for buyers and sellers.
Welcome back to Before You Buy or Sell a Business podcast. So on this podcast, most of the time we are working on trying to get better at buying and selling businesses. Part of that for buyers and even sometimes with sellers is doing due diligence the right way. So I'm really excited to have you on today so we can talk about due diligence.
Thank you.
So go ahead and give us your name, name of your company, and then a little bit about your background.
So my name is Ivy Millman. I'm the CEO of WHIZDOM, and I grew up in Chicago, and I got a bachelor's degree in accounting from University of Illinois. And then I worked for a number of years as a financial executive. And then I went back to school and got my MBA from Stanford. I worked at Apple for 7 years in business customers. And then I started WHIZDOM in 2003.
Wow. Okay. So quite the background, I guess going to Stanford and then to Apple sort of makes sense, especially probably at that time frame, right? A lot of people kind of stayed in Silicon Valley
Right, exactly.
Made some great careers out of it. So when it comes to due diligence side, maybe give us maybe a quick rundown and then we'll dive a little further into what you do and then sort of how you discovered it and decided to get into it.
When I started talking to M&A community, buyers and investors, what I found out is that they had third-party firms to do financial due diligence, QOV, legal due diligence, and technical due diligence. And I asked them, who's doing your customer due diligence? Who's talking to your business customers? And basically they told me they didn't have a firm that did that expertise. So what I found is that when I was in Silicon Valley, I was talking to business customers for Apple, HP, Cisco, Adobe, and I was trying to understand how these companies use the products and services, what their future needs were, and also what features and functions they wanted in order to meet those future needs. And what I realized when I started talking to the M&A community is that skill set and expertise was exactly what I needed and prepared me to do customer due diligence.
Yeah, it makes sense. So we met at the, I think the Kellogg booth
conference.
Yeah, and you kind of came up to me and said, "Hey, I need to talk to you. I do due diligence." And I'm like, "Okay, another person that does due diligence." And then you started to explain it to me, and I was like, "Okay, you have my attention. Let's talk." I run into a lot of problems with this, and I guess it's sort of one of those problems that maybe you don't clearly identify until somebody comes along and says, "Hey, no, this is a problem I've been seeing, and
Right.
this is how I'm going to solve the problem." So maybe we could talk a little bit about, exactly the process, what things you're looking for.
Yeah, so what we're looking for in customer due diligence, and this is B2B, and 90% of the buyers we work with are buying B2B companies. We're looking basically to understand the sustainability of the revenue streams and also the cash flow. So we want to know, after the company is acquired, will there be customer retention? Will there be customer stickiness? Will more customers buy more products and services in the future? So we're looking for all of that: customer retention, customer stickiness, high levels of customer satisfaction, high levels of customer loyalty, and what will cause a customer to change and switch to a competitor. And none of that is found in financial due diligence, quality of earnings, legal due diligence, or technical due diligence.
Right. And what I find most of the time working with buyers is that they don't necessarily have the ability to talk to the customer. So they may think about it and say, completely sure how that customer feels about this business that I'm looking to acquire. And then, of course, as a lender, when we're looking at it, or even an investor, when they look at it, if there's a customer concentration where there's more of their revenue is coming from one person,
Mhm.
typically if it's more than 25-30% of their overall revenue, we start to get a little nervous, because obviously if that revenue goes out the door, there's a high likelihood that they're going to struggle and maybe even fail. So sounds like you've solved that problem.
So what I was going to say at the beginning of your question is a lot of buyers think that they can't conduct customer due diligence because the sellers are very protective of their customers, and rightly so. And so many times the sellers will not give the customer contact information to the buyer until the last minute, or maybe not at all. And the reason that buyers retain my firm WHIZDOM is that we've developed a very innovative workaround to this major challenge. And what we do is we suggest to the buyer that they sign us up for a Zoom call with the seller, the buyer, and WHIZDOM. And what I say to the seller is, don't give the customer contact information to the buyer. Give the customer contact information to me. I'm an independent third-party firm, and I will not share it with anybody, including the buyer, because the buyer doesn't need the contact information to close a deal. What they need the customer information that we discover on the customer calls and customer due diligence.
Yeah, that's exactly right. And I mean, I understand from a seller side, right? They don't want somebody coming in completely understanding how to do their business, who the key players are in the business, who the key customers are, and then going and starting their own business, likely cheaper than buying the
Exactly.
company. So it makes sense where you come in.
Yeah.
So then maybe walk us through, if somebody came to you and said, okay, I want to hire your company. I'm worried about, XYZ within the company. Maybe walk us through a little bit of the process and what you do to obtain
Yeah.
that customer information.
So what I do is that I ask the buyer what they're trying to learn. And then I say to the buyer, I've been doing this for many years, and let me tell you what I think you need to know, which is, sometimes they're like, oh yeah, that's really helpful. And what I do is I develop a custom customer discussion guide that has all the topics that we're going to cover. It's not like a script. It's really a discussion guide. So depending on how the customer answers, I will pivot, or I'll be, well, really interesting. Can you share more with me? And things like that. We suggest to the buyer that they show the customer discussion guide, the customer discussion guide, to the seller, so that the seller understands what we're going to talk to the customer about and make sure that they're comfortable.
And obviously, you don't want the seller calling the customer and saying, hey, here comes some questions, answer them
Yeah,
really
no.
well. I mean, my impression is that the customer is, under the assumption that you're trying to help the seller, their current relationship improve and
Yeah,
how to improve customer
yeah.
service.
So what actually we do is we draft an email for the seller to send to the customers that we're going to be talking to. And we try to talk to, a high percentage of the revenues, like 20 to 25 customers across all the market segments. And the email says to these customers that we're going to have discussions with, that it says, we've retained an independent expert, Ivy Millman, Stanford MBA, former CPA, and she has 20 years of experience having discussions with customers. And we want to understand your future needs. That's what we say. We don't say customer satisfaction, because a customer doesn't really care about the target company's customer satisfaction. They care about their own customer satisfaction. So we ask them to basically spend 30 minutes with us and talk about their future needs. And customers really like that.
Yeah, I could imagine that they feel empowered, that they can make a difference. And if there is something that, they're struggling with between the relationship, they're probably more likely to talk to you about it rather than to the actual seller.
So what's really interesting, Jared, I develop a very easy rapport with these customers in the first few minutes because of all my experience.
Mhm.
And a lot of times they will share information with me that we're still trying to understand the phenomenon and the psychology behind it. A lot of times they will say, I want to share information with you, Ivy, but I don't want you to attribute it to me. I want to be anonymous.
Mm.
And so what they're telling me is complaints and features and functions that they've asked for repeatedly that never get implemented. And the reason they want to be anonymous is that they don't want to get bad customer service and support in the
Yeah.
future.
Yeah, they feel like they're going to get, kind of punished or
Exactly.
yeah,
Exactly.
retaliation, I guess.
Yeah.
Yeah, interesting. Yeah, that's pretty cool. Do you get pushback from the customers often that they say, I don't want to participate in this, or I'm
Yeah.
too
So
busy?
because it comes from the CEO of the seller, and it basically says, the email says, you're a very valuable customer, and we'd really appreciate you participating. And we put my Calendly link in there. The only reason I ask for 30 minutes is if you ask for any more, they will not give you any time.
Hmm.
So I asked for 30 minutes, but once they start talking and they appreciate that I'm asking about their business or asking about how the product or service works in their business, I'm asking all these kinds of questions. They're like, I'm so happy that somebody's interested in me. So I don't get any pushback. And if I don't get a Calendly link from them in, them signing up in a week, I start calling them and emailing them. And I've never had any problems. And also because it's business to business, we have never had to pay any like $25 Amazon gift certificates or anything.
Interesting. Yeah, that's cool. And then obviously, when you're done with collecting all the information, the report goes to the buyer and not to the seller.
Exactly.
Yeah.
The report goes to the buyer and also to their investors.
Mm.
And the report serves two functions. One is, what's in the report is individual customer information, including customer quotes, aggregate customer information, key insights and analysis, and actionable recommendations. And what we find from the buyer and the investors is they say we use it for customer due diligence pre-acquisition to understand customer retention, et cetera. And we're also using that report post-acquisition as a roadmap for post-acquisition initiatives to jumpstart the company growth. So we include for post-acquisition, we include ideas on how to attract new customers, how to make the product or service more user-friendly, how to get more customers to buy more products and services at higher prices.
I like that. Yeah. So I feel like in due diligence overall, you could kind of always find, something a little to take it a little bit further and use it, assuming you end up closing and buying the company. And I see that from the really good quality of earnings folks as well, where they're looking at it going, here's your report. Here's how the business historically is done. By the way, here's, the cash cycle throughout the year. Here's when you're going to need to buy inventory. Here's where you're going to need more working capital. And a lot of times they're sort of working to stay on with them and help them throughout the process afterwards. So it's kind of interesting that not only are you giving them, kind of a peek inside the business from a really true, standpoint, but on top of that, you're kind of helping them should they decide to move forward and buy the business.
Yeah, post-acquisition. The other thing is that for operators and for operators that are becoming sellers a year or two before exit, we do similar customer discussions. And basically, we're able to help, especially a seller a year or two before acquisition, to help them get ideas on how to maximize enterprise value, how to get a premium multiple, how to increase customer satisfaction and loyalty, how to reduce customer churn and increase stickiness, and again, how to get more customers to buy more products and services. So that is not customer due diligence pre-acquisition. That is customer discussions post-acquisition for an operator or an operator who's planning on selling and exiting.
Yeah, of course. I mean, a seller in reality probably should be doing this themselves, right? Paying attention to their customers, but some of them, it's not the right personality. They get too busy, so on and so forth.
Right.
I would assume if someone hired you to do this as a seller, maybe 18 months before they really wanted to sell, it would give them a really good, peek inside of how, their business is actually doing from a customer's point of view,
Right.
what they can work on and improve so that 18 months later, when they actually list it, now their business is in a much better position. And even if they didn't want to sell, they could probably do it just to find out how to drive revenue, right?
Right, exactly. If they're, most of the searchers are planning on exiting in 5 to 7 years. And so the question is what can they do during those 5 to 7 years to ensure that they're maximizing their enterprise value? And when they eventually sell, get a premium multiple. So yes, exactly.
Yeah, it's I wonder if the customers ever kind of figure it out, and I would think it's funny. It's almost like you have the, you know, inside information on someone you're going to go on a date with,
Right. Yeah.
So yeah,
I've never had a customer say anything about the company being acquired. I have a customer said, I really think what you're asking about is super important. I hope that the company continues to ask us these kind of questions because a lot of times customers will say, the company has never talked to us.
oh yeah. So then now the buyer has a good idea of what they need to focus on, and then also needs to understand that they need to continue to move forward with that.
Right.
Yeah, that's
Exactly.
interesting. I feel like it happens not only with your customers, but inside organizations a lot where the management team is not talking to, the people that are customer facing or driving revenue, and they don't spend enough time understanding what their struggles are or what the customers are telling them. And also when they make changes within the organization, they're not asking those employees how it's going to affect the relationships with the
Exactly.
customers. So a lot of times the seller as an individual may be the one, pulling the strings, and they may be making changes, but they're not thinking or even understanding how it trickles all the way down to the customer. So when
Mhm.
you're talking to them, they may see this light bulb go on that, oh, I didn't realize all these changes I made, this is how it affected the customer. And really that's how they
Right.
should be thinking every time they make a
And
decision.
and in the first year after acquisition, one of the questions we can discuss with customers is, how do you like the new management team?
Yeah,
Which, you have to have an independent, objective, unbiased firm to ask that
definitely.
because the buyer who now becomes the CEO is not they're not reaching out to the customer. What do you think of me?
Right.
It's just never going to happen.
For the most part, most people aren't going to be completely honest to your face anyways, right?
Yeah,
So,
not to your face, right? But if
yeah.
you're an independent firm, it's amazing what they will share with you.
Yeah. Yeah. I
I
think,
especially love when they say, "Don't attribute this to me." I find that super
uh,
interesting.
yeah, yeah, because they don't want them to come back later and find out.
Yeah.
So thinking back on the conversations you have, are there one or two things that consistently come up, that a seller maybe is doing that a customer, is frustrated with, that somebody could focus with if they're a seller right now?
So, I can give you some examples, like real world
Yeah, yeah.
examples. We conducted B2B customer due diligence for a target company that was a healthcare software service, a healthcare software application, and basically the buyer wanted to know, would it be beneficial to create a mobile app for the patients? So the customer was the healthcare practices, and the healthcare practices customer were patients. And what we found out, which the seller did not know, is when we talked to them about this mobile app, they said to me, Ivy, we get about 100 tech support inquiries a week from our patients. And I'm afraid, although it sounds really good to have a mobile app, I'm afraid that the technical support inquiries will double to 200 or more. And so we don't have the headcount or the infrastructure. It would skyrocket operating costs. So no, we don't want a mobile app.
Wow.
So that was, I mean, when we went in, we didn't expect to hear that. We expected to hear, oh, the benefits of a mobile app, etc. Another example was with the same healthcare software application. They said we were asking about customer satisfaction, customer loyalty, and what we found out is that the small healthcare practices gave them very high, like 9 or 10 rating in customer satisfaction and loyalty. And the very large healthcare practices gave them very low.
Huh.
And the reason that was a huge problem, Jared, is that the buyer saw the growth in the large healthcare practices. So that was totally counterintuitive, and they had a lot of work to do.
Yeah, yeah. I would assume there's definitely times where you've had conversations with the customers and came back and delivered the report, and the buyer says, "Okay, thank you," and cancels the transaction or decides not to move forward.
So I give you two examples. One is that we did a B2B customer due diligence project, and the buyer told us post acquisition that we gave her the confidence regarding customers to move forward with the deal. But we had another client who told us we decided not to do the deal in part because of the work WHIZDOM did.
Yeah, that makes sense. And I would guess that's pretty typical that it's sort of if someone's on the fence, they're definitely going to want to hire you to see which side of
Mhm.
the fence it's going to push them to when they're
Yeah,
done.
because they have financial due diligence, they have quality of earnings, they have legal due diligence, they have technical due diligence, and that those are all conducted by independent third parties that are objective.
Yeah,
And so, why is customer due diligence any different? The buyer cannot be objective, number one. They're just not objective.
right.
And second is that they have they're emotional and excited about closing the deal, so they're going to miss red flags. And then the other point I would just like to share with you is there's an ethical dilemma. What is the buyer going to tell the customer? They can't say I'm buying the company. The
Right.
seller would never allow that. So they have to be deceitful
Right.
with people that are going to be their future customers. Not a great decision.
Yeah, yeah, and I would assume the customer in general is not going to be completely honest like they are with you being independent as well. So
Yeah,
yeah,
definitely.
yeah. So what's the craziest thing that you've heard from a customer?
Well, I think the fact that they had 100 or two and were worried about 200 tech support inquiries from their patient, that was an indication of how bad the user interface was.
Yeah, yeah, that's very interesting. Yeah. So again, it's really difficult to understand really what's going on in the business until you're in there,
Right.
right? And there's no way to completely understand it until you're actually in running the business. And I think that's sort of the risk involved, right? But if you can try to minimize it as much as possible, and you may uncover things that you never even thought of,
Well,
like that. Yeah,
yeah, I mean, one of the areas that I discuss with customers is who is your primary relationship with at the company? And if I find it's all with the CEO, the founder,
Mm,
and they play golf every Sunday, I think the buyer wants to know that
yeah,
because when the buyer buys the company and the owner and the founder goes away, the competitors can come in with a lower price and take all those customers.
Well, and that's probably one of the big things that I usually ask is, who's the business? Is it the actual
Hmm.
individual person that is the owner of the company? Is that the business, or did they help guide the business? Are they overseeing the business? At the end of the day, who's the relationship with? Is that going to be able to continue? And so
Hmm.
you sort of answer that question when you're doing your due diligence.
Right,
Yeah,
right.
we get nervous when you're looking at a business that way, but I also feel like it could drastically affect valuation, and that's something I try to get people to understand all the time. Is everybody's usually hyper focused on multiples and saying,
Hmm.
well, if it's $1 million in EBITDA, then it should be 4 to 6 times multiple, depending on the industry. And what I try to get people to really pay attention to is that's not 100% true. When you're looking at a business that has $1 million in EBITDA, that's not telling you the complete story about the business.
Hmm.
Now, if the entire business is that one seller individual,
Hmm.
they don't have, you know, middle management or they don't have a C-suite of executives, and you are going to have to hire them.
Right.
So now you come in, that $1 million in EBITDA probably drops to about 600, maybe 500. And if you pay 4 times $1 million, but really it should be 500, which is
Hmm.
probably more like a 3 times multiple, you just drastically overpaid for the business where you
Right.
should be paying, 1.5 times or one
Right.
time. And so you're sort of helping to uncover those things as well. Because if a customer says, I only deal with the
Right.
seller
Exactly.
individual, if all 25 customers say that, oh, I've known him for 15 years and, our
Exactly.
kids are friends and so on and so forth, it's going to be a big uphill battle to completely transition that relationship, and you probably really shouldn't be paying a full multiple for it.
Exactly.
Yeah.
And when we work with operators and then they become sellers 12 to 18 months before, we say you have to really be sure that the business is institutionalized in the company and that everything isn't in your head.
Yeah.
You have to have a staff of people, and that they have to understand the business and be able to run the business with the new CEO.
Yeah. Well, as somebody that is responsible for my own production within the bank, I totally get having a hard time letting go of those customer relationships and
Hmm.
everything. But you sort of have to if you want to continue to scale, and then of course if you want to be a really good target for a buyer.
Hmm.
Yeah.
Hmm.
So I know you and I were talking the other day, and you were asking me some questions, and I said, let's save those and talk to them. So I'll let you go ahead and ask
Yeah.
me
So
some of
one of
them.
the questions I had was about defaults.
Hmm.
I've heard that they're increasing, but I don't really know. So you'd be interested in knowing that.
Yeah, I think the data that I've seen is showing that there has been an increase. I think there's quite a few different things that will kind of tie into that, especially in the acquisition financing. So more of the non-real estate SBA loans is typically how they're going to look at them. We've seen an influx in that for a variety of reasons. One being acquisition financing has really grown,
Mm.
especially in the last 5 years. 10, 15 years ago when I was doing it, there was probably two or three individuals doing it,
Yeah.
and they were much smaller transactions. You had usually a large amount of seller carry, so on and so forth. That category of SBA lending grew drastically in the last 5 years. So with that, you're going to have banks that make mistakes. You're also going to have buyers that make mistakes, not doing due diligence. I would say most of the transactions up until 2 years ago, we wouldn't even see much in the way of due diligence, maybe legal, but that's about it. And so you had a lot of transactions that maybe shouldn't have got done or shouldn't have got done at the valuation.
Hmm.
You also had sort of this place where right after COVID, SBA was doing a 90% guarantee.
Oh.
And then they were also doing some incentives where there was no payments due for the first 6 months, so on and so forth. So you had a lot of lenders that sort of deviated from their normal appetite of
Hmm.
just commercial real estate or maybe franchise lending, something like that, that got into the acquisition space and probably shouldn't have. They didn't really know the
Right.
product, didn't understand how it worked, didn't know what to ask, what to look for.
Right.
So they made some loans that they probably shouldn't have. So those have all sort of had trouble. And then you throw in rising interest rates at the same time, right? And
Hmm.
then you also had during COVID and right after COVID, we saw is sort of a really, really volatile revenue mix where either revenue was drastically down because of COVID, it may be way up because of COVID, and then after, then you had pent up demand in a lot of industries. So looking at a business and looking at their financials and tax returns for 22, 23 may have been skewed because there wasn't as much revenue in 2020 or 2021, and
Hmm.
all of that revenue
Right.
got concentrated in one period. So there's a variety of things that have sort of caused the issues.
Hmm.
I do feel like the lenders in the space now are, most of them are more experienced or kind of back to the ones that specialize in
Hmm.
that part of the industry, so they're making better decisions. We've definitely seen people be tighter on what they're looking for. I've also seen sort of the buyer pools tighten up a little bit.
Hmm.
There was a lot more people interested in buying businesses 5 years ago than there are now. So the individuals that have sort of made it through that
Hmm.
rough patch either didn't buy, realized how difficult it is to actually buy, and then of course operate the company.
Right.
The ones that we have now seem to be better buyers. So that's a really long answer to say
Yeah.
yes, there has been
So
some, but it
what
could be a
kind
little
of due
skewed.
diligence do you recommend or prefer a B2B
Mhm.
acquisition buyer do?
Yeah, no, I think it honestly depends on the type of industry, the type of business. There's quite a few factors that come into play, but absolutely some form of quality of earnings. And when I say that, I think there's a lot of people that look at it and just say, well, I'm ordering Q of E, and they don't completely understand what goes on when that report is done, right? And what they need to understand is that each industry is going to be a little bit different. So you sort of need to understand what you're looking for. The main thing that I would strongly suggest is that they work with a firm that has been doing it for a long time, knows what they're doing, knows what to look for, has a really good understanding of different industries and how those industries should function, so that while they're doing the report, they can sort of see that what they're seeing is different than maybe the last 10 in that industry. And then from there, the other side is they really need to be looking at the bank records and the bank statements and pulling information from that, seeing if it lines up with the financials. If the seller is saying that they, run a multiple of expenses through the business, that should be a personal expense and really should be W-2 wages or a distribution. Go in and verify those. Can you find in the bank statement? Can you find the receipts? Can you find all those things? And then continue digging through to make sure that those items really are something that if they went away and turned into an actual profit or a distribution or a salary, is that honestly how it should be? I would say that's kind of square one for if you're going to do any
What
kind
about
of diligence.
customer due diligence?
Yeah, and obviously up until I met you, I didn't really know it existed, and I don't know that it exists outside of your firm, but I think that is extremely important, especially if there's customer concentration. And like you mentioned, if it's B2B, and then if there's not contracts or if there's a lot of contracts that are coming up, one of the biggest challenges that anybody's going to have is a transition period, moving from, changing the entity a lot of times, or, a new face is coming out and talking to people. They may have new ideas with the employees. So there's a lot of risk that goes on with the transition in general. So knowing if those customers are likely to stick around or how happy they are in general, I think gets you basically as close as you possibly can to getting into the company and running the company before you do. And there's been a lot of transactions I've done where those are the stories I'm hearing afterwards is, had I been able to actually get into this business and run it, or pay attention to it for at least a couple of weeks before I bought it, I may not have, or I may have offered a lot less money because I didn't want to overpay. So those are kind of the main things. And then of course, using a good M&A attorney to help with all of the documents. And then not only just saying, oh, I've got this attorney who's been doing this for 10 years or 20 years, knows what they're doing. Don't just completely trust them. Read the documents. I've seen many times where somebody slips something into a purchase agreement last second and they didn't know, and then they get in, take over the business, and they don't, they're starting off in a bad spot.
Yeah.
So those are the main things that I would always suggest. There are times I'm working on a transaction and I'm asking the buyer, are you, what kind of due diligence are you doing? And when you get sort of a deer in the headlights look, it's really sending off a lot of signals to me that they're not, prepared. Maybe they don't know about it. Not everybody worked in large M&A, like a good majority of searchers that I work with, but it still sort of isn't an excuse that you should take a broker's and a seller's word for it when you're looking at it, or trust the bank.
But I talked to someone recently that is buying a B2B business, and first we were going to do the customer due diligence for him, and then he basically said to me, I've talked to the seller and now I have a really good feeling for the relationships, so I'm not going to do customer due diligence. It's like the seller is telling him about the relationships, and he's trusting that to make a multimillion-dollar investment. Bad decision.
Right. Yeah. No, I like to talk about searching as like dating, and there's a lot of stuff you can make with that, but I feel like it's the same thing as once you're going to marry somebody without really knowing them,
Hmm.
everyone's going to be on their best behavior when you first start
Exactly.
dating,
Yeah.
right? So it's the same thing. The seller's going to tell you what you want to hear. They want to sell the business,
Hmm.
So of course you're going to, hear all the right things, but then when you actually get in there and run the business, it's very different. So
Right. Exactly.
yeah, it's interesting. I think one of the common things I hear that sort of makes me chuckle, and then I typically will correct them quickly, is they say, "Well, if an SBA lender is comfortable with this deal, then I don't need to do due diligence."
But the
And
SBA lender wants you to do the customer due
exactly,
diligence,
and
right?
and it's not our job to do due diligence
Hmm.
as deep as what they're doing, right? We're looking at the financial side. We're trying to meet the SBA guidelines. Of course, we're going to ask questions. A very experienced SBA lender should be asking the right
Hmm.
questions. They should know from experience what to ask and what to pay attention to. But again, like you said, you're going to make a $5 million, plus, investment, or signing a personal guarantee. You really should spend the money and spend the time as well,
Hmm.
understanding the business, making sure you know what you're getting yourself into.
Right.
Yeah, it's
Exactly.
pretty scary. As far as like if a seller was to get the report and read through it, what are kind of the common things that they're
In the report.
typically, yeah, they're
Yeah.
typically seeing
So
that are problems?
many times the seller stays on for 12 to 18 months as a consultant. So it's beneficial for them to read the report
Mhm.
because a lot of times they're surprised by the results,
Yeah,
like the one I told you about with the 100 tech support inquiries. But what we do is that we identify how the sustainability of the cash flow and sustainability of the revenue post acquisition. We identify customer stickiness and or unforeseen churn. We're identifying the levels of customer satisfaction and customer loyalty. We're identifying the likelihood of a customer to go to a competitor and why. And we're identifying what features and functions the customers want going forward.
yeah.
So it's that range of information.
Sellers, may read that and take offense to it sometimes, right? They nobody wants someone to say that their kid's ugly,
Yeah.
but and I guess I would sort of equate it to, watching a reality TV show. In the first season, somebody looks a certain way, and then they see themselves on camera, and
Right.
the next
Exactly.
season they suddenly lost weight and their
Yeah.
hair's a different color.
Yeah, we haven't gotten any negative feedback, but the thing is that for the buyer and the investors, they're all like super valuable because a lot of time the findings, they're not all rosy, and it's really the on the shoulders of the buyer and their investors to decide if they want to move forward.
Right.
Like this one, they had the bad user interface. The buyer was like, "I can fix that. I can fix that." So that's not a reason. That's not a deal breaker for me.
Yeah. I mean, I'd also maybe say that they could use it to negotiate a lower price, because they could say,
Right.
yes, I can fix this. However, that's going to cost me time and money, and I should be focusing on other things within the business. So
Mhm.
I'm not going to pay you full price for it. So I wonder, because then the seller is sort of faced with, do I go fix it for, 6 to 12 months and then come back and have to find a new buyer and so on and so forth?
Right.
Most of the time it's sort of fair for them to,
Mhm.
discount the price at that time. So
Yeah, so I mean, the buyer and their investors need to look at all the due diligence, financial, QOB, legal, technical, customer, and decide for themselves what they want to do as far as structuring
yeah.
and the valuation of the deal.
Yeah, it's very, very important. So all right. Well, I always ask two questions at the end. So first one is, do you have a mentor, or have you ever had a mentor?
So I did have a mentor early in my career. I was the head of audit at 20th Century Fox Film
Oh
Corporation.
wow.
And my boss was at 20th Century Fox, eventually went to become the CFO and then CEO of Coca Cola
Oh wow.
Enterprises. And that was a subsidiary of 20th Century Fox, if you can believe that.
Huh.
And he was a mentor to me throughout my career.
Awesome. That's great. Yeah, it's obviously important to have the right people, and it's kind of fun to follow each other's careers, and
Hmm.
you're always going to be faced with something different, so it's nice to have someone to lean on.
Hmm.
So all right, so you've obviously been successful. I mean, you went to Stanford, it's great. Had some really good career, and then you've also been successful with your business. So what motivates you? What drives you?
What motivated me when I started WHIZDOM is that I wanted to help executives understand the impact of their decisions on financial results.
Mm.
And so since I've been in the M&A community, it's still the same, because making an acquisition is probably the biggest decision you're going to make.
Yeah.
And, obviously, what's the financial results of that? What I really am motivated by is helping buyers, operators, and sellers of small and medium businesses. We work in the lower middle market. So 1 to 5 million in EBITDA, 5 to 20 million in revenue. And so I really enjoy working with them. Every conversation I have on customer due diligence is different. Every conversation I have with a buyer is different industries, different aspects of the customer due diligence. And it's really challenging and interesting for me. So that's what motivates me. I love my work.
Yeah, it's so much easier to continue to do it on the hard days when you really enjoy it. So that's great. Yeah, I really appreciate you coming on. I really appreciate what you're doing. Due diligence is definitely something that people need to pay more attention to and be more passionate about it. I'm glad you're passionate about it. I'm hoping that, as you mentioned, seeing some of the default rates, the worst part about those is that somebody spent their hard-earned money, put oftentimes their kind of family on the line for those businesses. And when they don't go well, it's really sad and it's really frustrating and it hurts the overall industry. But it most likely could have been avoided if they did due diligence the right way. So I'm glad you're doing what you do. I'm glad you enjoy what you're doing.
Thank
and I
you.
hope a lot of people will reach out to you. So where can people find you to use your services?
They can email me at ivy.millman, MILLMAN, @gmail.com, or they can look at our website, www.WHIZDOM.com.
Awesome. Thank you again.
Thank you, Jared.
All right.
Thank you all for listening to Before You Buy or Sell a Business. If you found value in this episode, please follow the show, leave a positive review, and share it with someone. For more information, check out jaredwjohnson.com. We'll see you all next time.